The market's playing its hand. Are you reading the signals or watching from sidelines? Welcome to Daily Market Waves by Investing Angles, where every candle speaks, every Elliott Wave whispers, and we chart the turn before the herd even blinks. Today's video is a rare exception. It's being released to the public immediately. Normally, our daily updates are exclusive to members and delayed by 2-3 days for general release. If you are seeing it now, you are ahead. Don't make it a one-time thing. In this edition, volatility, flaring early warning signs, bond yields, short-term pullback or more, TLT throws tricky candles, dollar searching for a double bottom, natural gas no changes but still worth tracking, oil attempting a bottom but needs confirmation, gold played out yesterday's signal beautifully. What's next? S&P 500, a multi-angle breakdown, Nasdaq Elliott Wave update with live positioning, Goldman Sachs, a feature of the day, flashing strange signals for a healthy rally. Let's dive into the charts. No fluff, just sharp, data-driven insight. And we start with Volatility Index. So what are the candles telling us today? So this is the index and the futures. What we are seeing on the daily frame, the daily candle is formed an inside up and a fairly clean one. Very good chances for a move higher tomorrow. If we look at the futures, it's even better. So yesterday we had a harami, bullish harami, and today we have a confirmation. So it's even stronger than that. So this current red candle, it's just opened, and let's see what it closes tomorrow. Now let's have a look at the 2-day frame. So it's also quite strong, especially for the futures. Futures formed an inside up candle, fairly clean, very good chance for the next 2 days to be in green. And the index itself is kind of neutral bullish, but it needs a confirmation. So I think by Friday we should know what we expect from volatility. This is our chart, Elliott Wave chart. So far, no changes to this. Most likely, this is a bottoming sequence here, and the diagonal is potentially formed. Now we would be looking for a very strong move upward. Now let's move on to the bond market, and let's see what candle's story today. So this is the 10-year yield. What we are seeing is an inside down candle. This is a bearish one. However, it needs a confirmation. It's rather weak on technicals. Speaking about 2-day frame, it's could be a neutral candle, could be a consolidation, but also could be a spinning top. Next 2 days will tell us what will happen next. And the weekly, so far, it is still bullish after this big candle. 2 candles tried to reverse down, but met strong opposition. The green candle is a bullish piercing line, and now we are looking for another green candle. Still almost 3 days for the completion of the weekly candle. Now let's have a look at TLT. TLT, we have a very mixed setup today. First of all, the daily is strongly bullish. This is a bullish engulfing, and I would expect at least one more day of higher prices. However, considering the other factors, the closure with the green candle wouldn't be guaranteed. And one of these factors is the 5-day frame, which also closed today, and this is a very strong bearish continuation candle inside down with a very good chance for TLT to continue lower. And the weekly, so far, it is consolidating below at the bottom of this red candle. Very good chance to continue lower. So far, the trends, all 3 trends, daily, 5-day, and weekly, are bearish. If we look at the TLT Elliott Wave, TLT potentially formed an impulse down, and now it needs a bounce, corrective bounce for wave 2. Let's see what happens here. So far, this is the perspective. The purple path would be primary. So if we have wave 1, 2, then wave 3 would be somewhere here. But we'll measure it once we have a very clean information about wave 2. Well, also on the table, we are seeing an ABC formation potentially, but this wave C could only be an ending diagonal. So far, the purple path has better probability. Now let's move on to the next chart. So this is, I just compared several different ETFs. So this is the TLT, this is IEF. They both formed bullish engulfing candles, and now it tells me that there is a very good chances for TLT and IEF to move upward tomorrow. Now let's have a look at the dollar index. What do we have here? So I'd like to say that this red candle today is has confirmed a top here, and it closed just 2 basis points below the low of this previous candle, and technically this is a continuation confirmation. Right now the chances for a lower move lower are significant. And on the weekly frame, we remember that weekly only marginally confirmed a reversal, and it still needed a stronger push upward. So far, this candle can be bullish, can be bearish. We are waiting for the next 3 days to see what happens. So far, the monthly, remember, it closed with a bearish candle. However, it has a chance to form a bottom here and get support at the 100 months moving average. If we look at our chart, no changes here. Potentially I would consider maybe this is wave 3 and this would be wave 4, but at this point it's not that clear. So far the targets remain the same. Maybe this is just the final wave 5. It gets extended with one more subwave down, and the targets remain the same, 98.3 till 96. This is the most ideal by Fibonacci levels and by Elliott Wave formations target. Okay, so now let's move on to the commodities section, and today we start with natural gas. So what happened today? We had two consolidating candles, and there was no confirmation of a top here, and there are still better chances for natural gas to continue moving higher. The same thing happened on the 2-day frame. It's in complete dark cloud cover with better chances to continue the rally. And the weekly is after a very strong green candle, we would be looking for either consolidation one or another green one. Let's see what it forms in the next couple of days. So the chart remains bullish at this point. No changes to our long-term midterm chart that we discussed earlier. It's still either the green path or the red one. And if we look at the shorter term frame, this is the perspective path. So I'm tentatively accepting that this wave is an impulse for wave 1, and this corrective wave, it is corrective. It could be wave 2 of a bigger impulse. Let's see what natural gas develops in the next couple of hours or days. If we see a very strong move upwards, then it could be wave 3. Well, that's about natural gas. Let's now talk about another energy oil. So after yesterday's candle, which could be bullish or bearish, oil decided to make a stronger bounce, and so far the odds on the daily frame are bullish. However, if we look at the bigger frame, for example, the 2-day frame, even though the candle is considered as bullish engulfing, it's not strong enough to overcome this doji, and we need a very strong confirmation in the next 2 days. Let's see if this is if there is a chance to develop it. The 3-day closure today was with a doji, which could be bullish or bearish. So far it is neutral. We are looking for the next move by oil. So this could be a bullish bottom. But if you look at the chart at this point, there is a chance that oil is forming an impulse down. This wave 1, 2, 3, 4. This wave has been corrective so far. It might go a little higher at this point, but at some point it is expected to reverse and move down, potentially towards this target. Note, make a note that wave 5 could be longer than wave 3 for commodities. As a backup plan here, so wave oil could form an ABC, a bigger corrective flat, and only after that we will see another strong move down. But I'd like to emphasize the wave upward has been corrective so far. So that's the chances for oil. Now let's talk about gold. So for gold, it's an interesting story. Yesterday it formed at our top, and today it had very good chance to form a green candle. We discussed it yesterday in our video, and today gold reacted nicely. However, I'd like to say that if we look at the smaller frames, particularly the 4-hour and the other hourly frames, we are seeing that gold is grossly overbought at this moment, and it is trying to reset the indicators. If it happens, then we might see a move higher. However, there is also a chance of losing it and reversing. Let's see how it closes tomorrow with the daily frame and the 2-day frame. It would be also instrumental at this point. So the very first candle so far it's green and large, but we need to see a continuation, healthy continuation. And also the weekly closure would be very important at this point. There are chances for both bulls and bears, and we will be discussing a lot in our weekly report, in our weekly video. This is the chart that we shared yesterday with our members on video, saying that oil has a good chance to form the bottom here and create an impulse. If this impulse moves above all-time high, then it could be a bigger ending of a larger wave. However, if the impulse fails to cross the all-time high line, and especially if it doesn't form an impulsive wave, so for now it's an ABC only, we don't see wave 5, and we would consider this potential as wave 2 completing as a very sharp zigzaggish type, and we would be looking for wave 3 to start, which would go somewhere here or even lower. And I also discussed about potential impulse here with a triangular shape for wave 4. Well, that's Elliott Waves, and now let's quickly have a look at the momentum with MACD. It's very interesting story. So we had a record MACD cross, and right now it still stays bearish, and the 2-day frame, the cross was almost to happen, but it didn't. It was pulled back, and now we would be looking for the next 2 days. If this cross happens, that would be a very strong move, especially if we consider a very strong divergence here. Well, we are monitoring this. Tune up to our daily videos. Speaking about the GOD, this is again, GOD is making gaps. If it makes another gap tomorrow, it will be again 3 gaps in a row. And we will be dealing with this once we have a confirmation. And for the weekly, it is important closure coming. So if the weekly closes above this red line here, about the previous week low, previous week high, it would we would consider it as a bullish closure and the continued rally. However, if it drops and closes below this one, it would be bearish. All right, so if you found value in how we track and the turns before the crowd catches on, this is the time to subscribe. We are building a community of traders who rely on deep technical signals, not headlines. And you will already know that starting May 1st, daily episodes will be released to subscribers first, up to 3 days before the public sees it. The weekly digest will be members only for a full week. Click the join button below the video and choose a tier that fits your focus. Early access starts right away. And for the next chart, let's talk about S&P 500 and the other indices. So again, we have an interesting closure today. If we look at SPY QQQ, we are seeing 3 green candles, and the second and third one each closes lower than the previous one. This is a very interesting combination, and I've seen it several times, but I still have not don't have a very strong opinion about it. So most likely this combo is bearish, but it needs a strong confirmation, and I don't have a name for it yet. So for the Dow Jones, it's a similar story, and somewhat similar for IWM. I think that tomorrow the rate announcement day would be very critical, and depending on how the indices develop their daily candles, we would be looking for a continuation. Speaking about the futures, so futures are a bit more decisive. So far, we had 2 red candles. They were not able to confirm a reversal. However, they were not rejected yet, and there's still a good chance for forming a top. And I'd like to remind there were 9 green candles in a row. So right now, a little reversal is due. The question is how deep and how fast it happens. And if we look at some technicals here, so like we have a very strong bearish cross, 50 over 200 days moving average, and the looming 100 over 200. It will happen in a couple of days, most likely. So that's the perspective for the futures. Now let's have a look at the technicals MACD. So this chart remains intact. This is what we discussed in March 23rd. And we did some statistical analysis and projections saying that once we have a MACD bearish cross on the monthly frame, this would be the perspective 4,300 for S&P 500. Let's see how this projection plays. So far, I am not seeing any reasons to make any adjustments or cancel it whatsoever. Now let's move on to the Elliott waves. This is the chart that we shared with our subscribers on April 22nd. So far, S&P ES futures hit the target perfectly. However, I think from Elliott Wave perspective, this structure needs one more higher high in order to complete it as an ending diagonal. And in this case, it would be a perfect set. So two potential paths are on the table right now. The red one, if considering this would be wave B, or the purple one, considering this would be wave A. So purple, we would see a bigger flat, potentially bigger flat for wave B before we are seeing the next move down. Well, both paths are legitimate, have right now the biggest probability. Now, if we look at the short-term frame, this is the diagonal I was talking about. So this wave 1, 2, potentially wave 3, 4, and there is a chance for wave 5 here. Maybe we'll see tomorrow once the Federal Reserve announces their rate. Well, that's the perspective. It doesn't change. Now let's have a look at the sectors. So it's very interesting to evaluate them today. So financials are seeing the same, showing the same structure candle as the index, and the industrials and technology. And the interesting thing that technology, for example, it formed a very strong 100 by 200 bearish cross, death cross. Industrials made the cross today despite the higher prices. And for example, healthcare is strongly bearish, and there is a very good chance for continued move down. Consumer discretionary lost its 50-day moving average support. Now it's resistance, and the cross here, technically it is bearish right now. Utility is bullish, and I have no concerns about it. Most likely it will go higher. Energy is trying to form a bottom. However, it needs a strong confirmation. So far, everything is bearish here, the trend and the candles. Consumer staples are neutral. So technically, I would say that almost all sectors are vulnerable, except for utilities, which has the best chances to continue higher. But tomorrow, again, it will be a very critical day. Now let's have a look at the large caps. So the first thing that I can see here is that Meta formed an inside down. Meta is likely bearish, and Meta also made a fresh 50 over 200 days moving average cross, a death cross. Most likely Meta will go down, and we discussed Meta a couple of days ago, as far as I remember, in one of our videos. So nothing changes here. Microsoft, I think this is the third failure to form to move above the red candle. So this is now a concerning point. So Amazon is falling down after I mentioned that on Friday it had a bearish engulfing candle. So now we have 2 days down, and I think if we look at the bigger frames, Amazon is not looking good. Yes, correct. So that's a 5-day frame. No confirmation here. Most likely it will continue down. An interesting thing on the Nvidia chart. So this was a 5-day closure today, and I think Nvidia failed by what? By 8 basis points to form a bottom. It will cost Nvidia, I think, but so far, if we look at the daily frame, Nvidia is kind of neutral, but the chances for a move lower on the higher frames, bigger frames, are significant. Apple is moving down, and the freshly made 8x20 EMA bearish cross. Now we have a trend also flipped bearish. And if you watched yesterday video about Apple, you would know what to expect. Google so far is neutral bullish. It climbed above the 50 days moving average. Perhaps it will make it a strong support. Let's see what it develops in the next few days. Tesla, on the 5-day frame, it formed a strong bearish harami, and we also discussed Tesla yesterday. No changes to our long and midterm perspectives, and today's move down just confirmed the idea, the hypothesis. So far it looks like it's curling down, and it already lost support of 8-day EMA on the green candle. And the Berkshire Hathaway, we discussed it in details yesterday. It was the feature of the day. No changes there. So the candles today is an in-neck bearish candle. Most likely we will see a continued move lower. The targets we discussed yesterday. Now let's talk about Nasdaq. So Nasdaq, no changes to our chart that we discussed before. On April 22nd, we outlined these targets for Nasdaq. I think it moved about 8 or 9% since then. So far, it is in the area. It might get a little higher here just to complete the ending diagonal, the same way that S&P 500 is expected. But once it forms here, I would expect a sharp drop towards 17.7K. This is from the perspective of ending diagonal and Elliott Wave. And in our case, I would be looking, I think that purple path has better probability at this moment. However, it's not overwhelming. So if we see a strong impulsive wave down, it could be wave C of the red path. Now let's talk about the feature of the day, and I picked Goldman Sachs for its somewhat unusual candles. So this is the Elliott Waves, but let's probably start with candles first. So this is the daily candle for Goldman Sachs, and very, very strong bearish candle here. It's most likely a continuation doji, and it closed right below the 200 days moving average. And 2 days ago, 3 days ago, Goldman formed a bearish, strong bearish cross, 50 over 200 days. I think it already confirmed a reversal on the daily frame and has very good chances to move lower. The very telling combo is here on the 5-day frame. We have a candle, big one, and today Goldman Sachs had a chance to close above this red line, about the high of this red candle, in order to form a bottom. However, it was rejected, and right now bears are in control. And speaking about the monthly frame, monthly closure, we didn't discuss it yet. So this was the last update on April 23rd, 25th, I think. And I mentioned that Goldman needs to rally and close above 585.54 in order to form a bullish candle on the monthly frame. It failed, and now this tower top remains in effect, and we have a continuation, most likely a bearish continuation candle on the monthly frame. If we look at the 2 months frame, we have a very strong bearish engulfing, and this is now an even bigger concern. So the stock is not healthy. Most likely it will see a continued decline in this month and beyond. And from technical perspective, this is the chart that we discussed before, saying that Goldman has a very good chance to form a 15-day bearish cross on MACD and continue to move down. However, it's not everything. I think I already discussed it. So this is the monthly cross that is that has not happened yet, but it has a very good chance to be recorded in May if Goldman moves a little lower. And in this case, it would put this cross in the line with the ones that Goldman made in January 2022, and also in November 2007. So this would be a very significant one. And I'd like to say that this was the last time we discussed it. And like to say that this cross would be of a record magnitude, much bigger than the previous one. So we would be expecting Goldman to lose quite a bit. Well, that's the long-term chart that we've been discussing since March. I think that even we have an even earlier chart. Yeah, since in November, we said that Goldman is close to completing the top. So far, it moved down strongly, but I think this is just a wave A of a bigger corrective formation. So this potentially wave A. This would be wave B. And let's see how it develops wave C. That would be, it could be either an impulse or an ending diagonal. And now let's have a look at the short-term chart. This is something that we shared with our subscribers on March 29. So far, Goldman almost perfectly follows the chart. First of all, I'd like to say that it formed an impulse down, which is already a very bearish sign, and it will likely be repeated after a period of consolidation. The question is now when this consolidation ends, whether it's going to be an immediate A, B, C going down, or it will be a bigger correction, potential flat for wave B. Let's see how it develops. That's the perspective for Goldman. So far, this wave down would be aligned with the recent signals that we are seeing on multiple charts. So technically, this would be it. And now let me wrap it up. If you watch this video today, you are ahead. Most will see it 2-3 days later after the setups start to play out. So from volatility's early flare-up to Goldman's confusing signals, the markets are not behaving like it's business as usual. Our weekly reports go deeper. That's where we map the bigger picture turns. And what we are seeing right now is that markets are set for something very significant, potentially starting tomorrow or the day after tomorrow. I didn't discuss all the indicators here and all signals that I track, but it looks like I have a great alignment for the next couple of days for something significant to happen. And one of the biggest concern is the volatility and the volatility signals that are right now flipping bullish with the potential to flip even more bullish on the weekly frame. So that's the perspective. Like this video. If it sharpened your edge, drop your ticker or question in the comments. We might cover it next. Share it with your trading cycles, with your trading circles, Reddit, Discord, Twitter, wherever you talk markets. Hit subscribe and join to get our insights early, not after the move. At Investing Angles, we don't follow, we forecast, before the herd even blinks. See you in the next one.